The New Year's week was a dominant force in the housing market this last week, of course, so new listings and home sales data are very low. Those will start rebounding a bit in next week's data. The Christmas and New Year's holidays fell on Wednesdays this year, which kind of screws up 2 full weeks in terms of getting home sales done and tracking the numbers. But of course, at the same time, mortgage rates have jumped back over 7%, and the holidays happen every year. So for the 4 weeks of December 2024, there were just 44,000 new pending home sales on average per week for single-family homes. In 2023, that average was just under 44,000 per week. So by the December new contracts count, the recent sales growth momentum over the prior year seems to have faded. Now, there are still 5% more homes in the pending sales pipeline than last year. And you've been hearing recently in the headlines with those reporting growth. So when the December numbers come out from the traditional sources, they'll still report sales gains. It takes 30 or 45 days in the sales process before the home sale closes. And so what we're trying to track here are what the real-time signals are telling us about home buyers and 7% mortgage rates. So let's get to the data. If you're new to Altos Research, I'm Mike Simonsen. I'm the founder of Altos. We're now part of the HousingWire media family. We track every home for sale in the country every week, all the active inventory, all the pending sales as they happen, all the prices, all the supply and demand metrics, and we publish that every Monday so that you know exactly what's happening and can talk with home buyers and sellers who need to know. That's Altos Research. So let's look at this week's data. So let's start with inventory of homes for sale. There are 635,000 single-family homes unsold on the market right now. Inventory falls quickly over the holidays, of course. This week has 2.4% fewer homes on the market than a week ago. Most years have a little increase in inventory during the second week of January, and I expect that again next week, but then a dip later in the month. So there's not a lot of new listing volume early in the year. In normal years, it'd be early February before inventory hits the absolute low point and then starts climbing for the spring. When demand was hot, like during the pandemic, inventory might not reach its low point until March or April. So in those times, we just had far more buyers than sellers. That's not true now. So we should expect inventory to begin building this year in February 2025. So what other signals do the current inventory levels reveal? Well, there are 27% more homes on the market now than a year ago. And since we're entering the year with mortgage rates over 7%, that's got to put a damper on purchase demand. So if inventory starts building consistently in January, earlier than normal, that'll tell us a lot about the upcoming year. So the total number of unsold homes on the market to start 2025 is just 18% fewer than at the start of 2018, 7 years ago. So in this view of the last 10 years of inventory trends, I've highlighted 2018 for you here. The data illustrates a couple of important learnings. First, in the last decade, you can see how when mortgage rates are low and falling, inventory was falling each year as well. When money is cheap, we decide to buy and hold real estate, so inventory falls. In 2018, though, mortgage rates and inventory rose through that year. When rates stay high, like in 2018, or in the last 3 years, inventory grows. So you can see the last 3 years of cycle right at the right end of the chart here. And since there's no sign of mortgage rates falling substantially, we expect inventory to keep climbing throughout 2025. Because of this trend, it may be later this year when we finally reach those old normal levels of homes on the market. So we have only 18% more growth to reach 2018 levels right now. And in fact, there are many markets, mostly in the South, that have already more inventory than in 2019 or 2018. The northern markets still have very restricted levels of inventory of homes on the market, but those are growing finally a bit too. In our monthly webinar, each month we dive into the local market so you can see exactly what's happening in different parts of the country. The next Altos HousingWire webinar will be in a few weeks on January 23rd. So keep a lookout for that. And one thing we'll be watching for is whether January inventory numbers, that growth is catching up in the north compared to the southern markets. So the holidays are a really slow time for new listings, of course, and we'll see a little bounce in next week's new listings data. But let's take the opportunity now to look at a slightly different view of seller volume. I haven't shown this view in a while. We counted fewer than 20,000 newly listed single-family homes this week. The New Year's holiday was on the Wednesday, so that really just destroys the whole week. But remember, we can track new listings in two groups: those that are listed now and are going to active inventory, awaiting offers. There's also the group we call the immediate sales. These are new listings that take offers within like a couple of days of listing and go essentially into contract essentially immediately after listing. So they're already not in active inventory. They're already in the sales process. So we started tracking immediate sales during the pandemic, since the market at that time was dominated by multiple offers and bidding wars and buyer competition led to all kinds of craziness. That competition is now almost completely gone, and the immediate sales are finally almost gone too. We counted only 2,700 immediate sales this week. This includes Christmas and New Year's overlap time, so that makes sense. It's super low. But in this chart, you can see how the immediate sales have been shrinking all year as demand cooled. So in this chart, each bar is a week. The taller the bar, the more sellers, new listings in that week. The light portion of each bar are the immediate sales. And you can see how the total new listings in 2024 were generally greater. There were more sellers each week. The bars at the right end of the chart are growing taller again. And I expect another year of growth in seller volume for 2025. We won't get back to the previous levels we had, where we had like 100,000 new listings in a given week, like you can see in 21 and 22 in this chart, but we will continue to get more. About 13% of new listings are sold immediately now. That's down from 35% during the pandemic. One in every 3 homes was basically sold as soon as it hit the market. That was craziness. Every market has immediate sales though. So like you could probably recognize that warehouse in the right neighborhood where that savvy buyers are waiting to pounce on. And those always exist. It's just that we're back to a much healthier number of those now. About 1 in 10 homes are super hot listings rather than 1 in 3. So that's the supply side. Let's take a look at the demand side. This is where we're watching to see if the trend is changing. So there are 260,000 single-family homes in contract right now. That's roughly 5% more than a year ago. And any sales growth in over 2024 is very welcome. But of course, the total count of pending home sales is still 35% fewer than when we started 22 at the end of the pandemic. So a little sales growth seems to be in the works for the year. And as I mentioned, the holiday weeks are tricky to measure precisely. There's a lot of noise in the data. But if we look at just the newly pending sales for December, this year's December shows no sales growth over a year ago. And what we're showing here in this chart are the total homes in contract. So that number is at its low point for the year, this week or next, at the very left side of the chart here. Home sales start climbing in the next few weeks. And at the left side of the chart, you can see that the January numbers, January is starting about 5% more homes in contract than the year prior. But as I mentioned, the weekly sales numbers have been flat for a few weeks. So those 5% gains are in danger of falling to 0% gains. There are 2 factors here. We have the Christmas and New Year's holidays on Wednesdays, which kind of messes up both weeks entirely. But also, mortgage rates spiked over 7%. So if you're a potential buyer right now, it's very easy to delay a purchase until later to see if rates fall again. It looks to me like the sales momentum faded in December. Now, I don't have a way to tease out how much of the recent week's sales momentum is due to rates or due to holiday placement in the week, but starting next week, Each week, we'll have clearer and clearer signal about how sensitive would-be home buyers are to the cost of money right now. At HousingWire, we've forecasted 5% home sales growth in 2025, 4 million sales in 24, grow to 4.2 million in 25. But the recent data that I'm talking about here is worse than that forecast. So now it's a holiday, it's early, it's a short period, but it is something to watch in January in the face of relentlessly high mortgage rates. On to home prices. Home prices have stayed remarkably resilient nationally in 2024, in a year when the unsold supply of homes grew by 150,000 units. Home prices finished the year up about 4% over 2023. Now, the median price of the homes going into contract right now is just under $377,000. See at the far left side of the chart. The 2025 line is starting just above the previous year. Now, that's only a 2.3% over the same week a year ago. This is the national view, of course. Some markets in the Northeast have home price increases by like 10% in 2024. I had a friend mention that their suburban Chicago investment property had barely increased in value in a decade. And then suddenly last year, inventory was so tight that home prices drove its valuation higher pretty significantly. The key takeaway here is that if you use, say, Austin, Texas, or Sarasota, Florida as your reference for home prices, you'll probably miss the national trends. So we expect the trends for 2024 to continue into 2025, but less pronounced. So home prices will probably inch higher nationally, but move less than 24. In this view here, we're tracking the prices of newly pending home sales each week. We've used a 4-week rolling average to smooth out some of the noise. In the next couple of weeks, we're going to be watching how steeply this line climbs. After the new year, the best inventory starts getting listed, the real estate seasonality resets. Home prices peak then in June. 7% mortgage rates impact the prices paid, and you can really see the impact in June and October of 22 when rates spiked for the first time. So we're watching for home price impacts of these stubbornly high mortgage rates now in the first quarter. Let's finish today looking at the time on market for homes around the country now. Market time is a gauge of demand, and you can see it is reflected in that immediate sales metric I mentioned earlier. So homes are staying on the market nearly 80 days now, 78.7 days. It's almost 20% longer than a year ago. During the pandemic, that's down closer to 20 days at the peak of the craziness. So this average takes a while to adjust because in slow times, homes sit around the markets for many months. Later in March, when we have the most fresh inventory, the most new listings each week, and the most demand, that's when days on market starts declining for the season. Home buyer demand peaks in June, at the end of June, and so the market time cycle starts climbing again later in the summer. One last note on days on market. In the Altos data, we track total days on market. So if a home has no offers and it gets pulled over the holidays and then relisted in the spring, we'll count the total period in the days on market. Sometimes sellers test the market and withdraw a listing that gets no offer. These there aren't a crazy number of withdrawals right now, but that number is slightly elevated. So we will see some relistings in the spring, and that will drive the days on market number higher then. Okay, that's all the data we have time for today. If you need to communicate about this market with your home buyers and sellers, you should join us at Altos Research. Go to altosresearch.com, and you can now sign up for a free Altos account to get your local data. So we'll help you dive into your local market and start helping people understand the housing market today. So go check that out. Link below. See you soon.